Tony Zaparo, CEO of Equity Set, and you're watching Taking Stock.
Time to rock and roll on this Tuesday, June 30th, 2 minutes-ish to go here until the closing bell. Welcome to the Taking Stock broadcast. I'm your host today, JD Durkin, joining me to celebrate and talk about a fresh round of all-time highs for the Dow, the small caps, and the New York Stock Exchange Composite Index. The man you really want to hear from, the Einstein of Wall Street, Peter Tuchman. Peter
Nixon
Tuchman.
5.
So,
yeah.
I mean, you know, we always joke about when you're making the next round of hats. We're inching ever so closely here to Dow 60,000. Overall, what do you see for today's price action?
You know what, look, we have to realize that we've had these massive days, Russell reconstitution, S&P rebalance, and all that. Big rotation. Yesterday, the market was up 1,000 on the SPY and 400 on the Dow, but the advances versus declines were literally 50-50. That just signifies massive rotation, selling the outperformers, getting into some real value. Today, we were for sale big all day. Last day of the quarter, last day of the half, and for sale all day, the market did not want to break. They didn't need to window dress anything because we're trading at record highs. Today will be a Dow record close. Yep. This will be the S&P and NASDAQ's best quarter since 2020. I mean, what more exemplatives can we come up with than all that, right? So at the last second, at 350, we went from $2 billion for sale, flipped to $2.8 billion to buy.
Wow. And we'll see what the
Market's
closing tape
a
brings.
little bit of profit taking. It's a spectacular market.
All right, thank you for being here to kick off the show. As always, the National Air and Space Museum set to do the closing bell honors here at the big board. We got a lot more Taking Stock coming up after this. And there you have it, the National Air and Space Museum doing the closing bell honors down here on the trading floor of the big board, and the crowd is still going wild. I assume they're also cheering for me. Your final tail of the tape on this Tuesday, June 3rd, the final trading day of Q2, also the final trading day of the first half of 2026. Sorry, yeah, folks, we're halfway through the year. The S&P 500 in positive territory today, 0.8%. The Dow Jones Industrial Average, which goes all the way back to 1896, an all-time high, 52,317 and change, up about 0.25%. Yeah, Dean, that one deserves an applause. You're not kidding, my man. How about the New York Stock Exchange Composite Index? Also not to be outdone by the Dow in record-setting territory, up about 0.1%. And the small caps with a strong performance, up 0.5%. The Russell 2000 also closing at an all-time high. Tech, industrials, materials, far and away the strongest sectors in the S&P 500 today. And your S&P 500 laggards for today's tape, real estate, staples, and consumer healthcare. Pretty healthy risk on tape, all things considered, but you don't want my take on it. Let's bring in Mike Reynolds, VP of Investment Strategy at Glen Mead, for his take on today's tape and much more. My man, welcome back. Nice to see you again.
Good to see you, JD.
Come on over this way. All right, so more broadly, listen, dude, let's just take this first question wherever we want to go, because we're basically at record highs. We're not very far off for the tech-heavy NASDAQ and the S&P. The other indexes are there. How surprised are you at the resiliency of this market, at the ability for investors to say, hey, there's no shortage of negative headlines to choose from, but buyers still louder than sellers?
Always good to see an all-time high on some of these major indexes. A little bit light on the volumes today, but some really, I'll call them fireworks out of the semis today. Maybe some early Independence Day celebration we're seeing out of the semis. Really driving this market forward here to a good degree. And we're seeing even the small caps participating today, which is just really good to see that trade continue to develop this year. As it's not just the top of the market that's doing well so far this year. You've got a good performance out of smaller companies. Maybe not today, but we're getting equal-weighted S&P putting in some good weeks of performance here as well. So overall, the tape seems pretty great.
Yeah, the Russell 2000 up 20%, more than 2x what the S&P has done. Talk to me a bit more about semis, whether it's semis, software, memory, quantum. These are very high beta niche sectors of the overall market. When they go up a lot. When they fall a lot. And they're important for investors to talk about because they are of increased importance for a lot of retail investors out there, right?
They're really important, and we're looking just after the Russell rebalance last week. The Russell 1000 growth, semiconductors are a third of that index now. That's 12 times the size of the 5 smallest sectors. Real estate, utilities, materials, staples, energy, all combined. Only multiply that by 12 and you get the semi weight. I mean, it's really, you're getting, active management is going to really have to be a what I would call just an active decision at this point in time, where if you're following these passive indices that are just as concentrated as, say, the Russell 1000 growth, you really got to be going out of your way to get diversification in your portfolio right now. So it's a word to the wise, this is a great rally, but diversification is ultimately going to win the day longer term.
Yeah, and that Russell rebalance, also known as the reconstitution on Friday, we had more than 4.2 billion shares of total volume into the close. The vast majority of it happens here at the stock exchange in the last 90 seconds of the trading day. It was wild down here. Supreme Court this week, been a busy docket in terms of releases from the High Court yesterday and today. Let me get your take. Upholding Fed independence, and a big one for the market participants, the question of whether or not President Trump could fire Fed Governor Lisa Cook. The Supreme Court says, at least for now, that answer is no. What did you see and what are you following out of the High Court in D.C.?
That's exactly right. The big decision yesterday from the Cook case, basically celebrating Fed Independence Day just 5 days before the nation's own Independence Day. They went out of their way, the Supreme Court, to carve out this special case for the Federal Reserve being separate and distinct from the president's ability to just unilaterally fire, which just, I think, takes this tail risk off of markets that Fed independence would be at risk. It was not something markets were pricing materially, but it is something that is off the table for now, and is something that should be supportive of longer-term rates.
Speaking of on the table, we get the ADP jobs print tomorrow for the month of June, and then the big one Thursday. We don't get job releases from the Bureau of Labor Statistics on Thursdays a lot, but it's a shortened holiday week, so you got to get it out at some point. What are you tracking there? How important is this jobs print? No, and it's really one of the last big pieces of data the Fed will take into its policy meeting July 28th and 29th.
It's really capping the week off for us. This non-farm payrolls report, we got unemployment, we think it's going to come in closer to 4.3, basically no change. Okay. We think we're going to continue to stay in this low hire, low fire environment, perhaps come down a little bit on non-farm payroll growth because we've just been so hot the past few months, just come back to earth a little bit. But ultimately, we think this is a side of the Fed's mandate that they're just not going to have to worry about in the near term here. The focus is on inflation, and if you do get another solid jobs report as we expect for Thursday, the focus just continues to be laser focused on inflation.
Shucks, man, I'm out of time. That's like the worst part about interviews like this because I want to keep going with you. Please come back again. Mike Reynolds, nice to see you again.
Yeah, likewise.
VP of Investment Strategy at Glenmead. Robbie will take your mic. Bobby, you and I will head this way. Let's bring our viewers the top analyst calls on Wall Street on this, what is it? Tuesday. That's right. I always forget the day. Thankfully, they write it down for me here. First up, Loop reiterating Netflix as a buy. Troy, Pete, what's going on, fellas? Those are my bosses. I'm glad they're watching and we're doing a good show. They say about Netflix, the ad business has become a measurable driver for growth. Shares down 23% on the year. Next up, Morgan Stanley reiterates Alphabet as overweight, lifting the price target on the brand newest name in the Dow from 375 to 415 a share. Shares up 11% year to date. Finally, Deutsche Bank upgrading Comcast to buy. This is just one day after the company announced plans to separate its media and technology businesses. It's a move that analysts at Deutsche Bank says unlocks value. Shares are up today fractionally. Bobby, we'll take a look at one stock that calls the New York Stock Exchange its home. It is VZ, Verizon, down a hair under 4%. One of the worst performers in the S&P today, down 8% in the last 2 days after being removed from the Dow, following Friday's close. Shares are still in positive territory for the year, though, up about 4%. The average one-year price target on this stock sits at $51.89 a share. That suggests upside potential off these current levels of about 21%. Cheddar's very own Justine Miller caught up with the CEO of Psyonic to discuss the ways that their new bionic hand is helping to restore sensation for amputees and train AI robots. Fascinating stuff. Take a look.
As advances in bionics, AI, and robotics continue to transform industries and improve lives, we explore how one company is bridging human ability and machine intelligence. Joining us now to talk all about it is Dr. Adil Akhtar, founder and CEO of Psyonic. Thank you so much for being here.
Thank you for having me. Hello.
Of course. Hello there. This is the best greeting I've gotten on here before. That's incredible. So for viewers who may not be familiar with Psyonic, I know you're already giving us a little bit of a preview now, but tell us a little bit about the company and the mission that inspired you to found it.
Yeah, so what we're doing at Psyonic is we are developing and solving dexterity for humans and robots. And we do that through both bionic hardware, like the Ability Hand that I'm holding here, as well as AI software. And what's unique about us is that we can actually train robots to do all sorts of different tasks based on how our human users do the same task with the same hand. And so I personally have wanted to build bionic limbs since I was 7. My parents are from Pakistan. I was visiting, and that was the first time I met someone missing a limb. She was my age, missing her right leg, using a tree branch as a crutch. And that's what inspired me to go into this field and build bionic limbs that are accessible for both humans and robots.
Yeah, that's such an incredible story and so amazing to be inspired at such a young age and then to actually do something about it. That's just amazing. You guys recently announced a partnership with ABB Robotics centered around this ability hand. Is that what you're holding there?
That is exactly right. Yes.
Okay, that's what I thought. Yeah, tell us a little bit more about that collaboration. And it really seems like it's first of its kind with this kind of partnership between prosthetics, potentially robotics, all these things coming together.
And yeah, and it turns out that if you're building a robot to do human tasks, we've optimized our hands for humans to do human tasks as a prosthetic hand. And so our human users, they've figured out how to do like everything from like washing dishes to folding laundry to tying shoelaces to industrial pick and place tasks to stocking shelves. And the whole idea is that on the robotic side, you can move your robot from point A to point B, but they haven't been able to do anything useful. And because our human users have been able to figure out how to do the useful things, they're training the robots by taking the data that's generated from their hand and then using that to build AI models then to train the robots to do the exact same tasks.
Yeah, that's just incredible to think about how you can kind of bridge that gap between these two worlds that really do make a lot of sense together that maybe people hadn't thought of before as really being integral parts to each other. So tell us a little bit more about this ability hand. It looks like it's amazing and an incredible feat of engineering there. How does the technology actually work and what makes it different from other prosthetic solutions that are on the market?
Yeah, and so there's 6 motors in here, so all 5 fingers flex and extend. The thumb rotates as well. And so it's FDA approved. It's covered by Medicare, so it's very affordable here in the US. But also, it is the first prosthetic hand to give users touch feedback. So our very first human user in the US, Sergeant Garrett Anderson, has lost his hand in Iraq in 2005 due to a roadside bomb. And he told us he could actually feel his daughter's hand, and that was something that he wasn't able to do with any other prosthetic hand. And to be able to take that information and translate that over to the robotic side, right, where robots can then interact with humans or, for example, grab raspberries without crushing them or do all sorts of delicate movements in a workplace setting, that's what we're really unlocking with the ability hand for both humans and robots.
Yeah, and it's just incredible to think about all of these capabilities that you're giving humans, like you mentioned, someone who might be amputated, as well as giving robots to be able to then help humans in the future. Tell us a little bit about some of the challenges that you must face, because I cannot imagine how difficult this must be. Tell us about some of the challenges and how you overcome those in all of your work.
Yeah, and I mean, one of the biggest challenges right now in robotics has been dexterity, right? Getting the robots to do useful things. And so by having our human users do a lot of those tasks, we can actually get like the industrial pick and place tasks to work. So for example, when our human users control the hand, right, they'll use their muscles to make it move, they'll grab an object, but it's not as simple as just like grabbing the object. We need to sync it to cameras, for example. And so they'll wear Meta Ray-Ban glasses, and that way we know exactly what the task is. We can sync it to like when they were grabbing the object. We can measure how hard they were grabbing the object. And then when we have that camera data, we can put a camera on the work cell at an ABB installed environment and an industrial setting, and then have the robots do the same.
Welcome back to the broadcast. A longtime friend of mine, but I believe someone making his Taking Stock debut, joins us now. Greg Friedman, CEO of Peachtree Group. Great to see you in person, and thanks for taking time for the show today.
Thank you for having me.
All right, so we're going to talk about kind of hotel booking, concierge work, all surrounding the FIFA World Cup. What a fascinating conversation. What do you see in terms of hotel booking relative to what was forecast for the World Cup so far?
So, so far it's been a little bit disappointing on the booking side. So there's high expectations when originally the World Cup was announced that was going to be here in the U.S. And we expected, because we own and operate about 110 hotels across the U.S., so we had high expectations for the hotels that we had in the different cities where the World Cup was going to be having, having different tournaments and events. And unfortunately, it's been underperforming our original expectations, but it's been outperforming what we expected when we did our budgets at the end of last year. So it's not necessarily all bad news. It's actually been relatively good news with just the amount of visitors coming into the different cities like in Atlanta and some of the other markets that we own hotels where the World Cup has been having matches.
Yeah, that's really interesting. What do you attribute that maybe a bit of a mismatch to in terms of what you originally saw versus what you're seeing now? And you mentioned Atlanta. I wonder, are there particular markets where you're seeing outperformance relative to your original expectations?
Yes, so we're seeing, really like in Atlanta, we're seeing a lot of visitors coming internationally. I think it's just been one of those where there hasn't been as many international visitors coming to the U.S., just with some of the challenges with the geopolitical environment and so forth. So that's been a headwind associated with just getting people here in the U.S. But overall, it's been, I would say, successful just given sort of the macro events that have been happening across the world. So like for Atlanta, for instance, you're going to end up with close to 300,000 visitors from outside the U.S., primarily, that are coming to visit the city, and that's great publicity for that market.
It is, and what a great city in Atlanta, and also one of the greatest stadiums we have in North America.
Yeah.
There at Mercedes. I mean, my goodness. I mean, you
It's
and I
an incredible
we're talking
stadium.
about,
Yeah.
I'm not a big fan of MetLife Stadium, but
Right.
man, we look at the Atlanta Falcons home and we're like, God, that's a gorgeous place to play.
Right. No, that is definitely the case.
Would you say global exposure is a fair bit of a payoff here in the equation? And what has surprised you so far as the tournament has rolled along?
Yeah, I mean, global exposure from a standpoint of just like social media. I would tell you one thing that's interesting. You're watching a lot of these guests that are coming from out of the U.S. They're posting on these social media channels. Like there's one person I think is posting on X named Freddie. I'll use him as an example with Buc-ee's and so forth, and that's great exposure for some of these smaller markets like Auburn, Alabama, where there's a Buc-ee's, or out in Texas. So it's giving exposure to really these secondary and tertiary markets as well.
I'm glad we got a Freddie reference here on the show because
Right.
I haven't been able to figure out how to work in the Freddie sensation, and it is a sensation
Right.
on social media. I still have a lot of questions, though. I don't know. Sometimes it's not quite square, and I don't know what to make of it. To the real estate, land, or
Yeah.
hospitality more broadly, higher interest rates, maybe for longer. How do you see that impacting the consumer and impacting booking?
Yeah, so it's really the higher for longer interest rate environment is obviously putting pressure on the consumers, especially the K-shaped economy, as you know. It's hitting that middle tier and lower tier consumer and their ability to spend money. But the reality is it's also creating a lot of pressure on just real estate values. So it's impacting the underlying values. So it's a headwind to the values of like hotels and to other commercial real estate assets. And it's a challenge, but it also creates a huge opportunity for groups like us because we buy assets, we develop assets, we do a lot of direct lending on commercial real estate assets. So it creates a lot of opportunities for us as well.
How about the stalled housing bill? I mean, it looked like we were going to get this thing across the finish line. It was bipartisan
Right.
until the president said it's basically, no, we're not going to pass it until the voter ID, a completely separate bit of legislation passes. How are you thinking about that legislation? How important, or any thoughts? Because it's a big one down in Washington.
I think it's an important bill, so hopefully it does get passed. It's very focused on driving supply, and that's a big part of the equation with the housing shortage, especially on the low-income side, because we're short about 7.2 million homes when you think about just rental homes for the low-income sector. And so it's important for that bill to get passed, but I think that bill is just the first step towards it because we do need a lot more liquidity and we need a lot more supply to get built, and that requires a lot more liquidity in the housing sector.
Greg Freeman, I'm always grateful for your time. Usually you and I have to do this remote, separated by many miles.
Sure.
We get to do it in person today. The CEO of Peachtree Group. Come back anytime. It's nice to see you again.
Yeah, thank you so much. I really appreciate it.
And I appreciate you watching. Don't go anywhere. A lot more Taking Stock coming up after this. There you go. Welcome back to the broadcast. Joining me now is the director of what is truly, and I mean this, my absolute favorite museum anywhere in the world, the Smithsonian National Air and Space Museum. Please welcome to the show, Christopher Brown. What an honor, sir. Really nice to see you here.
Wow, what an honor and privilege it is to be here in the New York Stock Exchange the day before we rededicate the building on its 50th anniversary. So special.
So let's talk all about that, because people know I've worked here for many years, but I used to live and work in Washington, D.C., and there was no place I loved quite like your museum. So talk to me about why you're ringing the closing bell. What are you here to celebrate?
Well, you and many millions of other people have visited the museum over the last 50 years and been changed by the experience. Frankly, the building wore itself out, and so for the last 10 years, we've spent upwards of $1 billion of both taxpayer funds and significant philanthropy to completely rebuild the museum, new stories, expanding on the old, immersive, contemporary ways of meeting our visitors. And so tomorrow, we open 5 galleries, which will take us to 20 to wrap up this project on July 1st, the 50th anniversary of the building's original opening.
And please correct me if I'm wrong, that prior to this role, you flew more than 1,400 flight hours for the U.S. Navy.
I did. I flew F-14s, 320 carrier landings on the Eisenhower ship that was not too long ago in the Gulf and still in use.
Incredible. So first I wanted to say thank you, and thank you for your service. And how did that experience prepare you for what you now get to do, representing such an incredible institution the way you do?
Well, it's a good question, because as I look back, my time flying in the Navy were my most formative years in terms of preparing me as a professional, as a person, decision making. How do you make important decisions when you don't have all the facts? Because indecision is a decision of its own. And being able to operate under moments of stress, be very mission-oriented, very focused, and very, as I said, mission-driven.
Am I allowed to ask if you have favorite artifacts, favorite items that are actually inside the museum? I'm sure they're all like children to you, in one degree or another. But any that really stand out that are special?
Well, the aircraft, the F-14 we have in the collection at our companion facility, Stephen F. Udvar-Hazy Center next to Dulles, I have 2 hours of flight time in that very aircraft. So that makes me, I guess, as much of an artifact as it is. But I think in the Mall Museum, which again is reopening, there's a particular artifact that I think tells the story. And it's a piece of 1 inch by 1 inch cloth from the original Wright Flyer, along with a piece of small wood. And those pieces were given by the Wright family to Neil Armstrong. So and he took them to the moon with him. So only 66 years separate the first powered flight from the first human steps on the moon. And so it's this period of 66 years of science and technology and ingenuity and risk-taking that sort of collide and tell what I think is an American story. Human ingenuity, people being curious and solving problems.
Sir, I have less than a minute left.
Indeed.
Your top goals, your ambitions for the next 50 years and beyond of this incredible place.
Well, the museum is a place of education, and we've sort of put a lot of pieces in place to continue that mission. It's one thing to build a museum, it's another thing to be a museum. And so we are a place of education. We know people learn in different ways today than they did 50 years ago. So we want to connect with them, experiences, let people see themselves in the exhibits and see the possibilities.
I've been looking forward to talking with you all day, sir. I absolutely love the museum. I cannot wait to get back and see the reopening.
Visit.
Christopher Brown, director of the one and only Smithsonian National Air and Space Museum. Don't go anywhere. Don't go away. A lot more Taking Stock coming up right after this. Thank you, sir. Really a pleasure. Welcome back to the show. Time now for a few headlines in the world of fintech, crypto, and artificial intelligence you need for your Tuesday afternoon. At this hour, the crypto majors all down about 2%. Next up, Ramp Economics Lab finding companies making the biggest investments in AI grew their workforces by more than 10% over the last 2 years, with entry-level hiring rising even faster. Finally, Visa, Stripe, Coinbase, more than 140 total companies joining forces to launch OpenUSD. It's a new stablecoin that shares reserve revenue with participating businesses. And now Scarlett Sieber, the one from Money 2020, is now back with a new edition of Jargon Translator. That's, of course, where she puts complicated finance terminology into language that anyone can understand, even me. Take a look.
I'm Scarlett Sieber from Money 2020, and this is Jargon Translator. Today's term is capital adequacy, one of the quietest and most powerful forces in banking. Capital adequacy answers a very simple question. How much loss can a bank absorb and still survive? Banks don't just lend money, they take risk. Capital is a buffer that protects depositors, the system, and the economy when those loans go bad. So capital adequacy rules don't tell banks what to lend to, but they do tell banks how much room they have to take that risk. So higher capital requirements means less leverage, slower growth, more resilience. Lower requirements mean the opposite. This is why capital rules shape behavior long before the crises appear. Let's fast forward to today. When banks pull back from lending, it's often not because they don't want to lend, it's because capital constraints say they can't be lended anymore. Capital adequacy explains why banks look cautious even when they're profitable. It's not fear, it's that plain old math. And in financial systems, math always wins eventually. So with that, that is your Jargon Translated. If there is a banking term you want to explain without the noise, drop it below, it might make the cut. In the meantime, back over to you.
Welcome back to the show. Before we wrap up today's broadcast, we got a viewer-submitted question sent earlier today wondering where is LeBron James going next and what does this mean for the economy? Well, if you believe reports, LeBron may be interested in going to Golden State Warriors. That is already the most valuable franchise in the NBA with an $11 billion valuation. You assume that goes up. The Silicon Valley effect, of course, for LeBron's many off-court business networks continuing to expand, plus Bay Area hotels, tourism, and a surge in ride sharing. Hey, we don't have Waymo here in New York, but Waymo is huge in the city of San Francisco. Waymo, of course, owned by Google parent company, Alphabet. Tomorrow here on Wall Street, we got the ADP jobs print for the month of June crossing the tape in the morning. We got U.S. manufacturing, PMI, and tomorrow morning, the latest quarterly results from General Mills. Thank you for watching today's jam-packed, can't-miss edition of Taking Stock. Have a great night. We'll see you again tomorrow. Woo!